Hey, good morning. Let's go over today's trade plan. So in the overnight session, sellers have been more dominant, and at this point, ES has been balancing in the lower part of the overnight range. Heading into the open, we're going to be using 67.75 to 69.75 as the micro bull bear zone to establish our short-term directional bias. If the market holds here and then breaks out above 69.75 and 70.75, then that would indicate that the buyers are still in control, and we could head up and test 74 quarter to 76 quarter. That's the next inflection point, and if we can clear that, then the market can even push to a new all-time high. Now on the downside, if we break and liquidate from here from 67.75 and we break through the high volume node at 67, then that could be setting up a directional move down into the 59 to 61 quarter initial support zone. Now if the volume remains pretty light, like it has been in the overnight session, then that's an area where buyers can still be active, and we would also be exhausting the range a bit, especially if it's a straight line move into 59 to 61 quarter. So we can certainly get rotation there because the larger time frames would still be on the upside, but short term that would be liquidation into the initial support zone, so it does call for caution, and we will have to keep an eye on the volume situation, and if volume is rapidly rising, then perhaps it's a better zone to target on the short side, and be careful on the long side, because the main support zone at this point, if we liquidate from here, the strong support is down at 49 to 51 with the open gap at 50.75. So overall, heading into the open, we know that the possibility of a directional move is definitely present at this point, and breaking below 67 and 67.75 would confirm that sellers are in short-term control, and that could lead to continued liquidation down into at least the 59 to 61 quarter, and then if volume really gets up to speed, then potentially even down into 49 to 51, but we would have to see some pretty decent volume in the market in order for that to happen. And if we hold here at 67.75, 69.75, then we could be setting up for a retest of 74 quarters, 76 quarter, and the all-time high at 79, with the potential to still make a new all-time high, but that's something we'll have to gauge in real time. If we reject the micro bull bear zone, the high odds inflection point would be the 74 quarter, 76 quarter, and the all-time high at 79, and then we'll just have to gauge and see how strong the market really is, and if there's again enough volume to justify a wider range. And if there isn't, then the safe bet is to exit any long trades into the 79 all-time high and perhaps even a little bit ahead of it. So we are going to keep a close eye on the volume situation. The other markets, NQ has been relatively weak to the S&P, and that theme continued in the overnight session. But NQ is also at a short-term inflection point. There's a key high volume node in NQ around the 42.98 area, and if NQ rejects that and then breaks out above 4,300, then there could be some upside potential in Nasdaq as well. So all the markets are at short-term inflection points, and because of that, there is definitely high potential for a directional move off the open here. So let's keep an eye on the micro bull bear zone and see how the market reacts to that. I'll break below it. Our focus will be on the sell side, and if we break out above 70.75 and we hold the micro bull bear zone, then there may still be a short up at initial resistance, but at that point the buy side will be more in control, so we'd rather focus then more on long setups. But if we break here, then the short side will be the better side to focus on. Overnight the market has been pretty weak, so we do want to be cautious on the long side here. So right now, until the market really tips its hand and breaks above 70.75, even longs are risky down here. So let's just keep an eye on how the micro bull bear zone reacts, and we'll take it from there.